Welcome back after the break in our Expert Speak segment. Today I am joined by Vipin Anand, former Managing Director of LIC and former Insurance Ombudsman, Karnataka. We'll be discussing about Insurance for All by 2047, IRDA's flagship vision for universal protection and stronger, more inclusive insurance ecosystem. Thank you, Vipin Anand sir, for joining our Insurance Mantra show. It's a pleasure to have you with us today. Sir, to begin with, as we are discussing about the insurance for all, according to you, what does it really mean? Don't you think that we don't need to wait till 2047? We can achieve this target of insurance for all by 2030 also.
Thank you very much, Anurag, for inviting me to this show. And this is a very important topic which we have taken today because it can totally transform the Indian society within a very short period of time if all these stakeholders come together and really ensure that this is achieved. I will not go into the technicalities. I will just try to explain in very simple terms what exactly insurance for all means. It means what it says. Every earning member in the family should have life insurance. All family members should have health insurance. The assets in the house should be insured. The vehicle and other things, whatever costly thing is there, that should be insured. Then you are a farmer, your crops should be insured. You are an MSME, your assets should be insured. Basically, all assets and liabilities where either something is giving you income or where you owe something to somebody, all these kind of situations should be fully insured. That is the purpose of this mission.
Okay.
And as to your second part, as on date, we have a kind of an insurance population very roughly of 100 crore people, out of which coverage is just about 40 crore. So covering 60 crore people within a short period of 3 to 4 years, I think is not going to be there. I mean
to say that when we talk about insurance for all, for health insurance, Ayushman Bharat is there.
Yes.
For life insurance, Pradhan Mantri Jeevan Jyoti Bima Yojana is there. For crop insurance, government's crop insurance scheme is there.
Products are there, but then a major challenge is taking them to the end customer.
Okay, sir.
Distribution is a big challenge.
Distribution is a big challenge. Do you think that due to that only our insurance penetration is much below the global average? For life insurance, it's below 3%. For general insurance, only 1%. And global average is around 7%. So, what, according to you, what are the challenges? Because you have spent more than 40 years in the insurance industry.
There are 3-4 major challenges which are there. The first challenge which is there is that the insurance awareness in the public or financial awareness in general is not very high in India, because of which these kind of products are difficult to sell. Second thing is that the distribution system for reaching 140 crore people has to be huge. You see, countries like China and Japan have more than 100 life insurance companies. A small country like UK has more than 300 insurance companies. In India, even after so many years of privatization, we still have just 26 life insurance companies as on date.
We increase our penetration, means for in life insurance from 3% to, if we achieve 4%, 5% in general insurance also, if we double our penetration. And as you said that we need more and more number of insurance companies also. So what impact it will have on our socio-economic condition?
Anurag, let me go back a bit. As early as 2009-10, the penetration of life insurance industry was 4.6%.
4.6.
It was already 4.6.
What has gone wrong, sir?
2009-10. So this is somewhere we need to maybe introspect and find out what actually went wrong. Of course, I will try to give some suggestions about it. That is one thing. Second thing is, what we are talking today is numbers. Unfortunately, the focus has always been on these two metrics of penetration and density. which deal only with the money part of it, not with the people part of it. What we need to look at in insurance for all is the coverage to 140 crore people, or let us say 100 crore insurable population out of that, and adequacy of that coverage, the protection gap as we call it, which is at 83%, is the highest in the world.
Okay.
If you need an insurance of, let us say, 1 crore rupees, you are insured only for 13 lakhs. That doesn't really take care of the things. So these are two areas which need to be brought into focus. And that is, I think, this IRDA mission of Insurance for All is trying to bring into play. If it happens, just a second, if it happens, then the penetration and density will all automatically be taken care of.
Okay, sir. Now again, I'll come back to your previous statement that in 2009 we were at 4.5% of penetration, and now we are at around 2.8. So what went wrong?
I would not say what went wrong. I would just say that certain changes in tax laws and regulations came in, which affected the industry adversely, and which I think after so many years of experience, maybe we need to have some relook at.
No, but the tax changes came in 2019-20 only, and after, I would say 21-22. But if we see the trend after 2009 only, it's on a declining way only.
You see, one thing which happened was the product regulations which came in.
In which year?
2013, that happened when small sum assured policies were closed down, because of which straight away the number of policies crashed like anything. In fact, LIC alone at that point of time was doing 3 crore 84 lakh policies in 2013, and next year it crashed down by more than 1.5 crore straight away.
Oh, from 3 crore?
3 crore 84 lakh, it crashed down to just about 2 crore.
Okay.
So almost 40% of policies went out of the window.
Because of the regulation.
Because of the regulation. Similarly, there were, at that point of time, the training level of agents was maybe not very high. So they were just selling a few products. And when those products closed down, the agents left the profession altogether. So even the number of agents came down drastically. This totally impacted the industry because for a very large time, LIC has been the industry.
Yeah, certainly.
Okay. Another thing which happened subsequently was that taxing of maturity value. I'm not very sure, I don't have the figures, but I don't think it's bringing a lot of revenue to the government. But it has dampened the spirit of the people to put in a large amounts of money in the insurance premiums. Again, the tendency is towards shorter term investments. I fully agree with the government stipulation of 10 years term as far as income tax benefit is concerned. But the condition which is there is 10% of premium. Even if it was slightly tweaked from 10% of premium to 10 years of term, I think it would make a lot of difference.
But now,
in
sir, it
interest
doesn't
and
matter
premium.
because 95% of public is in a new tax regime and there is no deduction. So it will it hardly matters also.
You see, the point is the people who have big money are in the old regime. So when we are talking about density, there it matters. Okay. One major thing which has happened is that today in an endowment policy, you can surrender the policy after 2 years. But in a ULIP policy, there is a lock-in of 5 years. Now, ULIP is a product where the value of your investment may vary from day to day. So I feel that this 5-year period lock-in for ULIP is very harsh, and it should be brought at par with the endowment period of 2 years. Actually, when the this penetration was 4.6%, ULIPs were contributing hugely to that penetration.
So mutual fund was not contributing.
This 5 years lock-in has put ULIP at a huge disadvantage in the current scenario of mutual funds.
Okay, sir.
I think that can make a lot of difference.
So my final question to you, because you have worked with LIC for 38 years, worked as an insurance ombudsman for Karnataka for 3 years. So, can you tell us what's the gap between ombudsman, what the gap between industry and the policy holder you have seen as an ombudsman?
You see, the basic issue which I find in most of the cases is that the policyholders do not read the proposal at the time of taking the policy, and the policy bond is too complicated for them to understand. I think this information gap and information asymmetry between the insurer and the insured is something which needs to be looked at. The IRDA has brought in that one-page customer information sheet. I think that should go a long way in going into this if people really look at it. Then there are things like cooling off period, there are things like moratorium in health policies to take care of the customer's part. They should understand all the options open to them. Again, they have the ombudsman, they have the consumer forums to help them. If they take care of all the things, I think there is no reason why this trust deficit cannot be ultimately eliminated.
Okay, sir. Thank you so much, sir, for sharing your thoughts for our insurance mantra. It was a pleasure talking to you, sir.
Thank you.
So that's a wrap on this edition of Insurance Mantra, but we'll leave you with our insurance basics. Did you know? When you take a home loan, many customers believe that buying the bank's credit life insurance is mandatory, but the fact is credit life insurance is not compulsory. Your lender cannot force you to buy their insurance product as a condition for approving the loan. Even if the bank recommends insurance for protection, they must clarify that it's optional and you are free to choose any policy from any insurer. And here is the important part: in credit life insurance, the bank is the beneficiary, not your family. The cover amount keep reducing every year as your loan balance goes down. In comparison, a term insurance plan is also a choice which offers higher protection at a lower cost, and the payout goes directly to your family, giving them complete flexibility whether to pay off the home loan, manage expenses, or handle emergencies. So next time you take a home loan, remember buying credit life insurance is choice, not a compulsion, and choosing a separate term plan can also give your family broader, stronger, and more affordable protection. Stay informed, stay protected. That's our insurance mantra.